Good morning, everybody. Welcome to the BitBoy Morning Show. Today we're going to be taking a look at a huge update for Ethereum, but something goes wrong. There was a bug. We'll tell you more about that in just a few minutes. We're also going to be taking a look at why 2026 could be a good year for crypto. So let's go ahead and get started here. Okay. We're going to go CoinGecko to start. Coming in at $1.3 trillion. No, it's coming in at $3.254 trillion in market cap. It's up 1.3%. 24-hour volume is 150 billion. 57.1% dominance, ETH 11.9%, and half away will send you an ETH transaction. Man, how many Mission Impossible movies can they make? Okay, 3.25 trillion in market cap. Like we said, here's a visualization of that. We dipped a little bit lower, but we're kind of on the upswing now. And trade volume is down a good bit today, but you can see the visualization there. Wow, was that the latest numbers? No, we're going to redo the numbers. Sorry about that. Market cap 3.127 trillion. We're down a little bit. Bitcoin has had a tumble last couple hours, or at least since its local highs. 24-hour volume is 122 billion, very low volume. Bitcoin dominance 56.8%. ETH dominance 11.8%. ETH transaction still pretty cheap to send, 0.171 Gwei. Just like nothing. Okay, so market cap $3.127 trillion, trillion. And 24-hour trading volume, you can see, is very flat. Trending, Firo still trending. Let's take a look at his chart. He's been trending quite a bit. They're in Terra Luna Classic, no thank you. And Monad. Terra Luna Classic is up 75.9%. This is just a crappy coin doing nothing. Omni Network, kind of same thing. And Terra by itself, same thing. There's gonna be some news about Terra. Let's see what that is. So what happened? Was there news? Let's see here. There's a Terra Luna resort in Epic Universal, Orlando. Let's see. Why is the price rallying? Do Kwon's is sentencing is soon. I don't know what's going on here with this. Yeah, so I guess that's the news. Is sentencing is soon. It's getting the name in the headlines. So, all right. So Firo is at 695. Been trending quite a bit. See if there's any news on it out there. Oh, just price news. Just price news. That's about it. Okay, so we did win our trade yesterday, our short on Bitcoin. Price of Bitcoin coming back in 89,000 right now. So we have a dip back below 90,000. $2.4 trillion, or it's up 2.4%, or down 2.4% last hour. Ethereum coming in at $3,060, down 2.6% in the last hour. Last hour has been a lot of movement. XRP down to 205. BNB 882. Solana 133, all red all the way across. Tron, recent red in the last hour. It's still up a little bit for the week and for the day. Dogecoin and Cardano all red. Let's see. Whitebit getting in striking distance again in the top 10. So Cardano pretty far behind Dogecoin here, respectively. Down $6 billion. So, all right, let's see the last hour if there's anything good going on. Whoa, proving its blockchain. This one moves a lot. Just always moving. Always in the top 10 for winners or losers. So as you can see, that's the only big mover. Leo token also up 0.7%, not that big of a deal. 24-hour volume, let's do the losers first. Canton, Coin, Aptos, Hyperliquid, Pump.Fun, WorldCoin, Pepe, all 9% losers in the last 9% plus last 24 hours. On the positive side, you have Prudence Blockchain and Zcash. We would go back up a little bit. This is not a coin you want to invest in. It's a coin you buy to use, I believe. The price is always around $1. It always makes me think like it is kind of a stable coin. That's kind of the category I put it in. So Tron 0.7%. So Prudence Blockchain, the top winner of the last week. Bitcoin Cash at 5%, Rain 3.3%, Chainlink 2.6%, Figure HELOC and Whitebit coming in after that. And then Tron. And then Sui. Everything else below 1%. Canton Coin having the worst week. Zcash having a bad week. Aptos, Flare, Internet Computer Protocol, Pi Network, all having some bad weeks. Let's look at the month. Rain up 139.8%. World Liberty Financial, those are top two again today, just like yesterday. Bitcoin Cash, Whitebit, Caspa, Quant, Monero, Prudence Blockchain. Those are all up 10% or more for the week. Biggest losers of the week, Meme Core still the biggest loser, 49%. Canton Coin just hasn't registered their 30 days yet. It should be any day now, anytime. Aptos, 31.5%. 30.7% for ICP. I mean, all these were big gainers the last couple of weeks, and they've lost a lot of their value. 29.2%, Pump.Fun, 29.1%. Just coins just getting absolutely crushed out there this week. Because Bitcoin just can't figure out what it wants to do. Bitcoin was hanging pretty tough, and now we're back to 89,000. So all right. We did win our trade yesterday. I show you a falling knife right there. And it's still falling. It's at 88.4 right now. 88.4 right now. Well, hourly giant red candle. Wish I would stayed in my short. I sold it. Made like $1,000. This would be worth about 4,000, I think. if I had stayed in my trade. But the important thing is that you get winners. So it's a reversal pattern. The wick right here. And look over here. This is a range that moves through very fast. Went from 87 to 90,000 in 2 candles back here. So not a lot of support or resistance is there. We're getting to the bottom of that range. Probably go down to 87.6. Probably about what will happen. All right. So the fear and greed index right now is coming in at 28. Yesterday was 26. So a little less fear than either last week or last month. Getting back over the 28. We're out of the dark orange zone. We're back in the light orange zone. So we'll see what happens. Fed 87.2%, they're going to cut rates. So, all right, let's take a look at what happened with Ethereum. Ethereum's Fusaka upgrade executed flawlessly on December 4th, 2025, marking a historic milestone as the network achieved zero downtime while implementing the most significant expansion of data availability since EIP 4844. However, within hours of activation, a critical bug in the Prism consensus client threatened network stability, causing validation issues that slowed block finalization before client diversity safeguards prevented potential crisis. The incident unfolded as Prism nodes experienced denial of service-like conditions triggered by excessive historical state generation. Prism core developer Terrence Tsao explained that historical state generation is computed memory heavy, and a node can be dosed by a large number heavy, and a node can be DOSed by a large number of state replays happening in parallel. Over 2 hours, a spike in stale attestations targeting checkpoint routes from offslots forced affected nodes to reconstruct historical states, pushing systems into compromised operating conditions. The Ethereum Foundation quickly issued emergency guidance while 10 other consensus clients maintained network operations, preventing any service disruption. Client diversity proves its value during crisis. While Prism operators scrambled to implement the emergency workaround flag, disable last epoch targets, alternative clients including Lighthouse, Tiku, Nimbus, and Lodestar continued validating blocks without interruption. The network maintained consensus throughout the incident, with finalization continuing despite affected validators experiencing participation issues. Lido Finance reported minimal impact compared to other staking solutions, attributing its resilience to distributed validator operations, where Prism powers approximately 15% of node operators. Protocol's Q3 2025 metrics demonstrate balanced client usage as a deliberate strategy to mitigate single client failure risks. Most Lido operated Prism setups recovered within hours after applying the recommended configuration changes or temporarily switching to alternative clients. So despite the fact there was this bug on Ethereum, they still had no downtime, which is pretty unbelievable. So glad they got their junk fixed before it caused any problems. This is a very technical story, probably most of you guys don't care about. Okay. Fed rate cuts could turn 2026 into crypto's first tailwind year from Delphi Digital. Federal Reserve's expected December rate cut to 3.5 to 3.75 bips. Projected 2026 easing marked crypto's first net positive liquidity environment since early 2022, favoring Bitcoin and digital assets. Federal Reserve is poised to deliver another 25 basis point cut at its December meeting, which would reduce the federal funds rate to approximately 3.5 to 3.75%, while forward market price at least 3 additional cuts through 2026. It could push rates into the low 3% range by year end. Delphi Digital noted that with the quantitative tightening ending December 1st, a Treasury general account drawdown ahead, and the reverse repo program fully depleted, this is the first net positive liquidity backdrop since early 2022, turning policy in 2026 from a headwind to a mild tailwind. The research firm emphasized that 2026 represents the year policy stops being a headwind and becomes a mild tailwind, favoring duration, large caps, gold, and digital assets with structural demand like Bitcoin. Markets widely anticipated the December cut, with CME FedWatch pricing 88% probability ahead of the Federal Open Market Committee meeting. The decision came despite limited economic data. October's inflation and employment figures weren't released due to the government shutdown, forcing policymakers to rely on alternative indicators showing mixed signals. The Kobesi letter starkly framed the Fed's dilemma, noting that even as inflation is 3%, the Fed must cut rates to save U.S. consumers. The analysis highlighted a K-shaped economy in which consumers are struggling while large cap tech stocks are soaring, forcing the Fed to cut rates into one of the hottest stock markets in history. With retail sales rising 1.3% in September and the S&P 500 up 17.8% year-to-date through December, the wealth gap widens as Americans need the support as the labor market deteriorates. Goldman Sachs chief economist Jan Hatzius projects the Fed will pause in January before delivering cuts in March and June, pushing rates to a terminal level of 3 to 3.25%. In fact, according to Reuters, Bank of America shifted its December forecast from holdout to cut, stating that by cutting rates next week, we think the Fed would increase the rate of pushing policy into accommodative territory, just as fiscal stimulus kicks in. Get out of here. Get out of here, cat. Your tail is on the screen. Your tail is on the screen. No. Okay. The backdrop extends beyond rate cuts. Quantitative tightening's end removes roughly 60 billion in monthly balance sheets reductions that drain liquidity through 2023 and 2024. Growing division within the Federal Open Market Committee complicates the outlook. October's meeting produced unusual dissent, with members voting both no for a cut and for a more aggressive 50 basis point reduction. A rare occurrence in Fed history, with only 28 prior instances of opposing dissents. According to Forbes, minutes revealed sharp disagreements, stating many participants were in favor of lowering the target range for the federal rate cuts at this meeting. Some supported such a decision, but could have also supported maintaining the level of the target range, and several were against lowering the target range. Political factors add pressure. Reports emerged that the Trump administration canceled 2 interviews for Fed chair finalists, fueling expectations that Kevin Hassett might replace Jerome Powell in May. Bank of America cited leadership change as the primary driver of its forecast for 2 additional 2026 rate cuts in June and July, noting that its forecast of additional cuts next year is due to the change in leadership, not our read on the economy. Keith Buchanan, senior portfolio manager at Global Investments, observed that markets are betting the Federal Reserve will have ammo to lay off hawkish tone that we saw a couple weeks ago and perhaps lean more towards dovish into what looks to be a disappointing and weakening labor market. Asian currencies tend to benefit from December's cut in 2026 easing. India's rupee, which breached 90 per dollar for the first time, faces relief from reduced pressure, while Indonesia's rupiah, South Korea's won, and the Philippine peso, all down over 4% this quarter, could stabilize as Fed policy turns accommodative. As per Bloomberg, traders now price over 90% possibility for the quarter point December cut based on swaps data. Further Fed easing is likely to be supportive for Asia FX in general. So there you go. There's your bullish story. Want a bullish story? There it was. We're getting rate cuts. There'll be more rate cuts. They're going to turn quantitative easing back on next year. Keep an eye on Bitcoin here. It's bounced a little bit. Bounced just a little bit here. It really doesn't have any support or resistance on this level in a long time. We could zoom out a little more. Look again, these big red candles in this range. Between 90 and 87, like everything is a big candle. Look back here, same thing, big candle. So this could be a major bounce point if it gets down to 87.7 or so. Let's drop another $1,000 and then blast off. We'll be on our way. Bitcoin is down nearly 30% from its record high. History show that's normal. Price of Bitcoin has fallen around 36% from its all-time high. Underscores the volatility that has come to characterize cryptocurrency. Moves from previous cycles not only show how past current price swings are all part of Bitcoin's normal operating pattern, but also how they may often precede a rally, according to figures compiled by CoinDesk. Bitcoin, the world's largest crypto, dropped to a low of around $80,000 late last month before staging a rally and failing again this week. When Bitcoin dropped under 81,000, it represented an opportunity or an approximately 36% fall, resulting from a high of around 126,000 hit earlier in October. As of Thursday, Bitcoin was trading at over $93,000, according to Coinmetrics, a roughly 26% decline from its record high. These price swings may seem large, but they're normal in relation to Bitcoin's history. Bitcoin's price movement is often referred to in cycles. Generally, the Bitcoin cycle refers to a 4-year pattern price movement that revolves around a key event known as the halving, a change to mining rewards that is written in Bitcoin's code. While there are signs that the typical timing and patterns of the cycles could be changing, the range of price movements appears to be consistent. In the current cycle, Bitcoin's already weathered a 32.7% pullback from March to August 2024 and a 31.7% decline between January and April of 2025. Looking at previous cycles, volatility of this magnitude appeared consistent with long-term trends. During the 2017 cycle, there were drawdowns around 40% twice that year and then 29% decline in November before Bitcoin reached a new high. Looking back at the 2021 cycle, Bitcoin recorded declines of 31.2% in January that year, 26% in February. There was more than a 55% correction between April and June 2021 as China banned Bitcoin mining. The asset then rallied to a new high in November that year. All right, guys. That is all we got for today. Hope you guys enjoy the show. Have a good day. Be blessed. BitBoy out.